Pull up to the bar, liquid lunch, things that make us want to drink. There are some downsides to using Airbnb, the social media home sharing service, to rent out your house, condo, or apartment. Sometimes the renters leave the place trashed, or maybe invite others over, or in one case, never leave. That's what's happened to Corey Chagall, who advertised her 600 square foot Palm Springs, California condo on Airbnb. One man, who goes by the name Maxim, contacted her and said he needed a place to stay for more than a month. However, the condo owner says he immediately began complaining about the accommodations and demanded a refund. Chagall says she had trouble contacting Airbnb, who eventually did respond and told the unwanted renter to leave. But he did not, and still hasn't, 2 months later. It appears that because he stayed for more than a month, he has rights as a tenant. This is California, after all. And so Chagall had to hire a lawyer to have him evicted. As for Airbnb, they issued a generic statement to Business Insider saying that the overwhelming majority of Airbnb's 15 million users have had a good experience. Their places weren't trashed, people didn't show up and drink too much, and it's trying to work on a better and stronger platform. And that takes us to our favorite person of the day, when we pick one person who grabbed our attention and not for the right reasons. We all like to post photos of ourselves on Facebook and the like, showing off new clothes or bragging about places we visit or the people we interview on television. But perhaps it's best not to post a picture of yourself wearing the dress you stole. 27-year-old Daniel Saxton from West Frankfort, Illinois, was arrested after she did just that, posting numerous selfies of her wearing a dress she allegedly stole from a clothing boutique. Saxton was caught after the store's owner revealed surveillance footage of the theft and then posted a Facebook message himself asking for people to be on the lookout for anyone who was wearing the dress. And it just took a few hours. That's when Saxton posted, quote, "Love my new dress," and a picture of it online. She was busted shortly thereafter. So for not being able to stop yourself from telling the world you just stole something, Daniel Saxton is our favorite person of the day. Next, has the GOP abandoned business? You're watching Arise Exchange.
I believe that people are watching news less today, definitely. I think that more so people are going online to catch their news.
We've numbed the human mind to murders and all these bad things. The content is a constant loop of the same stuff. So there needs to be, new content all the time.
Arise News, every culture, every angle.
For several years, big business and the GOP sang from the same hymn sheet, promoting lower taxes and cutting government spending. But the rise of the Tea Party and the effort in some states to oust Republican office holders through primary challenges has led to fraying of the ties. Hadley Heath is the senior policy analyst at the Independent Women's Forum, and she joins us by the phone to discuss this topic. Hadley, there was a story basically in the Financial Times that said that the days of business and the GOP working together appear to be coming undone. Do you think that's true when you talk about immigration, when you talk about money spent on infrastructure policies, et cetera?
The alignment of big business with a particular party in this country, certainly I believe the lines have become more hazy. We've seen, I believe, a greater measure of populism in the stances of the Republican Party, maybe because of the influence of libertarian ideas, but we've also seen, unfortunately, greater coziness on the left between big business and the Obama administration, or Democrats in the Senate. So it is becoming a more messy landscape when it comes to the support that big businesses are putting into both parties.
Well, it seems whatever party's in charge sort of engages in corporate cronyism a little bit, and I'm wondering if that's sort of giving rise to those in the GOP. And you say a populist movement to really bash big business, which, of course, for years now with the recession has been seen not necessarily in the best interests of Americans.
That's right. I think there's a growing awareness among the American populace about bailouts and subsidies and special treatment that some industry lobbying groups secure for themselves, and it's to the expense of us all, because not only do they manage to get some competitive advantage through these special treatments from the government, but this is harmful to consumers because we end up with fewer options. And the favoring of one business over another, even within industries, ultimately is harmful to innovation. I said earlier that the Obama administration is guilty of this too. If you look at green energy, for example, the public was very aware of the Solyndra scandal, and that was a cronyist deal, no doubt.
So government needs to stop. Government needs to stop picking winners and losers. The American public should pick the winners and losers. But when you're talking about regulatory efforts, big business really sucks up to whatever party is in control, because big business writes the regulations, because that's how they can keep competitors away.
That's right, and that's why I believe we need to go back to, a focus on small business, a focus on defending the little guy, because ultimately, big business and other big businesses of all sizes can pretend to be against regulations, but at the end of the day, sometimes big businesses favor regulations that give them a competitive advantage and might put their opponents or their smaller competitors into bankruptcy. So some of these regulations that we talk about, the regulatory compliance effort, it costs so much that for a small business can really be damaging.
Yeah, and I don't think the Tea Party, though, out there is a friend of small business either, because, when you're just not for any regulations or you're more libertarian, that's not necessarily good for small businesses, especially on immigration.
Well, the U.S. Chamber of Commerce has been very much in favor of immigration reform. We do see a break in a large swath of the Republican Party, including some Tea Party advocates when it comes to the issue of immigration. But there are some Republicans who are stepping away from their party on this issue, who are in favor of immigration reform, especially making legal immigration more streamlined and easier for people so that they can work and can contribute to our economy and to our society. So there is, I believe, a split among Republicans when it comes to the issue of immigration. It's not a clear party line delineation on that particular issue.
Okay, Hadley Heath, Senior Policy Analyst at the Independent Women's Forum. As always, thank you.
Thank you.
Tomorrow on Arise XChange, we'll give you a preview of the U.S.-Africa Leaders Summit starting next week in D.C., where more than 45 heads of state and 100 ministers will be in attendance. Let's take a look at the markets once again. Really, earnings news powering the markets across the board. Green arrows all around. I'm Andrew Schmertz. Thanks for watching Arise XChange. See you tomorrow.
Result.
Welcome to Global Business Report on Arise News. Punishing Putin, an economic Cold War, is easier said than done. Saudi's multi-billion-dollar wake-up call to the world's investors, and how the blessings of Ramadan turn sour if you're on less than $1 a day. I'm Michael Wilson in London, Tuesday, the 22nd of July. The EU is threatening Russia with more sanctions after the downing of flight MH17 in eastern Ukraine. But some analysts say taking tougher measures against the Russians could damage Europe's recovery, as it relies on so much trade with Moscow. Since the fall of the Berlin Wall all those years ago, Europe's economies have become increasingly entwined with Russia's. Some European states, like Germany and Italy, would barely live without Russia's energy supplies. €1.5 billion and 2,000 jobs depend on France supplying 2 warships to Moscow. The list continues. It's a complicated business, as Francis Maguire reports.
Russia must be getting used to the idea of sanctions now, with EU foreign ministers threatening them with tougher measures today.
Look, everybody wants to see a balanced set of measures as we go forward, but the world has changed since the European Council last week. The events of last Thursday have changed public expectations on us, and we have to send a clear signal from our meeting today that we recognise that and that we are going to go further.
But that hasn't stopped France from delivering a Mistral warship to the Russians. It's part of a €1.2 billion contract and comes just a day after David Cameron called the deal unthinkable. The British Prime Minister says it's time to consider Tier 3 sanctions against Russia. A move like this would affect whole sections of Russia's economy. But while Cameron says there could be tougher sanctions, many states in Europe, like Germany and Italy, are reliant on Russian trade and energy. 35% of gas used in Europe comes from Russia. It's why some EU states won't be looking for an economic war if it threatens Europe's recovery.
Sanctions would have a negative impact, but only in the medium and long term. I don't expect the DAX to react immediately. Still, sanctions are definitely a strain on the economy, both on those hit by the sanctions as well as on those imposing them.
There are fears that sanctions against Russia could push up oil and gas prices. It's led one analyst to say the world needs to find alternative oil supplies.
When you start actually to see that the amount of exportable oil is falling almost worldwide, and it's been replaced partially with fracking in the United States, which is questionable, but basically we have a lack of energy. So these geopolitical conflicts and this ability now to deliver oil through a pipeline means that we'll have to look for alternative oil supply and alternative availability of delivering that product. And that means basically overall higher cost and higher price.
Investigations into the downing of flight MH17 continue, with the potential for economic implications looming large for Russia. Francis Maguire, Arise News.
Trevor Williams is chief economist at Lloyds Bank. So will they be tougher with Russia? Can it happen?
Well, I think from the comments that we've already heard from the US and from the close allies that it has in Europe, led by the UK with regards to willingness to impose sanctions along the style that the US has done, then I think almost inevitably.
But the US can say this easily, can't it? It can also do the sanctions itself. But Europe, as we said, is interlinked. Not so much the UK, but Europe itself.
Well, I'm not quite sure that that's true insofar as there is always a price to be paid for taking action against someone whose behaviour you want to adjust.
Yeah.
And I think that what the US is saying and others is that if you do this now, there may be less pain later.
You think that's the strategy, do you?
Well, I mean, I'm not a politician,
no.
But I think that with regards to the commentary that we've heard, then it's clear that there will be tougher sanctions because the Ukraine situation, aside from this clearly disgraceful event, is an issue that isn't going to go away. And the view that Ukraine has a right to associate with the EU if it wants is something that is also an issue.
In a sense, though, I mean, Russia holds a lot of aces, doesn't it? I mean, if the ruble weakens as it has, that's fine for them because it increases their ability to export. If the price of gas rises, that's fine for them. Can't see how they're going to lose right now.
Well, I actually think the opposite. I think Russia is extremely vulnerable. The question isn't so much whether or not sanctions would damage Russia, it's whether one really wants to damage it too much. Because there's already capital flight from Russia. On many estimates, it's running at 60 billion annualized. Its economy has got a big deficit, and it needs funding from overseas, particularly the banking sector, which is extremely fragile. It needs know-how to get to the oil and gas that it has, and it does not have that know-how itself. It needs to have international investment, and frankly, it would be very damaged if tough sanctions were imposed on its energy sector and on its banking sector.
All right, let's talk about banking. I mean, the British Prime Minister has come under criticism for saying that the UK will impose sanctions, but it's the City of London. I mean, over there, that's where a lot of Russian money actually is laundered, is just there. There's a lot of assets. Chelsea Football Club, the London property market. I mean, do you think the UK would take a hit?
Well, they benefit as well, don't they? I think this is the point. I mean, that who would lose the most? I mean, the money's here because it needs somewhere to go, where there is, ironically, the rule of law. It owns what it owns. No one can take it away from it. Things are done through a rules-based system. And so on. So it's here because it wants to be here.
So to sum up, Trevor, what you think is that this pressure can be exerted and will be exerted on Russia and will work?
Well, I think it will be exerted. The question is if it damages it too much, because no one wants that, actually.
Trevor Williams, thanks very much indeed for joining us.
Thank you.
Asia's biggest economy, China, has just completed several trade deals with Venezuela, giving the Latin American country a $4 billion credit line. The Chinese president has already signed key deals with Argentina and Brazil over the past week as China continues its recent strategy of investing in the world's natural resources. Jagdeep Chima reports.
China, in its relentless pursuit of natural resources across the globe, has another country ticked off the list. Venezuela has signed a number of trade deals with the world's second largest economy.
We have signed 38 new deals in areas of innovation and technology, oil and mining industries, ground transportation, infrastructure, housing, agriculture and others.
In return, China has offered a $4 billion credit line, which will go into the joint Chinese-Venezuelan fund, which aims to improve infrastructure and economic development in the South American country. Venezuela plans to repay the money through oil shipments to China.
This financing structure, as we know, won't put a heavy debt burden on our country. This funding is backed by an oil production and supply deal with China that is currently around 524,000 barrels a day.
Bilateral trade between Venezuela and China has jumped to $19 billion annually, compared with just $183 million in 1998, the year Chavez came to power. The agreements came on the latest stop of a four-country visit to Latin America by Chinese President Xi Jinping. Mr. Xi has already signed key deals in Argentina and Brazil and plans to visit Cuba next. In Argentina, the Chinese leader agreed to an $11 billion currency swap, providing much-needed funds for the Argentine government. Argentina has been locked out of the international capital markets since a debt default in 2001. Chinese trade with Latin America has grown rapidly. It's now the second largest trading partner for Argentina and Cuba and has been Brazil's largest since 2009. Analysts say the purpose of the visit has been to secure more natural resources from Latin American countries to fuel China's long-term economic expansion. This year, China has already signed a number of trade deals in Africa. With the latest deals over the past week, it appears China's burning ambition to become the world's largest economy is showing no signs of slowing down. Jagdeep Chima, Arise News.
As believers around the world continue to fast in the Islamic holy month of Ramadan, Nigerians are outraged at rising food prices. Despite astounding growth in recent years, everyday life in Africa's biggest economy is still a struggle for those who live on less than $1 a day, especially during this religious period. Adefemi Akinsanya reports.
Market day in Lagos is popular with locals out shopping for plentiful supplies of fresh fruit, vegetables and meat, but not so much for its prices. In a country which has seen surging growth in recent years, most Nigerians live on less than $1 a day. Inflation hit 8% in May, and that means day-to-day living is getting even harder.
Everything now is expensive. Even the milk that we are buying like 1,000 naira before, if you want to buy it now, it's like 1,500 or 2,000 now. Even rice, beans, everything is, even kerosene, everything now is very expensive.
Many in Lagos are celebrating Ramadan. Nigeria has 170 million people, roughly split between Muslims and Christians, giving it the largest population of Muslims in sub-Saharan Africa. The holy month means that followers fast during the day and feast afterwards. The iftar or evening meal is a time for welcoming guests with traditional cuisine. Lagos Central Mosque, Bolaji Darenijo, chairman of the executive committee, says that too puts pressure on prices.
Nowadays, in Ramadan time like this, we get a lot of food selling, and a lot of people will have to buy food to be able to break their fast. So demand and supply will cause the rising of this type of things.
Others, though, point out that inflation has seen a steady upward march since the start of the year, well before Ramadan. Nigeria is Africa's biggest economy, but rising consumer prices could mean its gaping inequalities may yet get worse for many. Adefemi Akinsanya, Arise News.
To the stock markets, and earnings in South Africa's Kumba Iron Ore, a unit of Anglo American, have fallen 16% in the first half of the year, mostly because of weaker prices. In West Africa, Senegalese telecommunications company Sonatel's net profit has gone up by 7% to more than $200 million. Currencies: South Africa's rand trading flat, despite the general global risk aversion from the political tensions in Ukraine, Russia and the Middle East, and the metalworkers' strike, which is now into its 4th week. The Kenyan shilling also trading in a tight range. Nigeria's central bank held interest rates at 12%, keeping them at the same level as the last 2 years. Commodities: Brent crude oil rose above $108 a barrel, boosted by the escalating political tensions in Ukraine, fighting in Gaza. Price of gold dropped as investors moved away from the safe haven metal and back to equities after signs of cooperation from pro-Russian rebels over the Malaysian Airlines crash. Egypt's tough new austerity measures have been implemented to reduce the country's public deficit to more manageable levels. But in the volatile region, there's concern they could also trigger civil unrest for the country's new president, Abdel Fattah el-Sisi. Hayley Platt reports.
A new government, but the same old problems. 3 years of political turmoil have seen Egypt's economy slide deeper into debt. New president Abdel Fattah el-Sisi says he's determined to fix it. He's already raised taxes on cigarettes, alcohol and more recently on stock market gains. But it's the near 80% increase in energy prices that was seen as the biggest shock.
We've seen big increases in the prices of 80-octane fuel, which is the one that's most commonly used by the poorest strata of Egyptian society. This has resulted to increases in transportation costs, and this has resulted in conflicts between public transport workers and their customers who are rejecting the price increases.
Sisi wants to reduce the deficit to 10% of GDP in the next fiscal year. That compares to an unexpected shortfall of 12% in 2013 and 2014. The government says the cut in fuel subsidies should help them save over $7 billion annually, and there's still room to cut further. It's a bitter pill for many Egyptians, where the poorest spend more than half their income on food.
The government's treading a very precarious line. It either fixes its finances or risks economic chaos, or it removes food subsidies, is what it's trying to do, and risk civil unrest. So, they are damned if they do and they're damned if they don't.
Inflation has been a huge problem. It's gradually been falling after surging to a 4-year high of 13% in November, but economists expect it to rise again next month. In a surprise move last week, the government raised its key interest rates by 1%. That may help keep a lid on rising prices, but the country still has many structural problems that need fixing.
The quality of education is a big problem, and whether or not it suits the labor market. The ability of the state to attract investments is a big issue. Political stability will really depend on how much foreign investment, particularly from Gulf countries, does Egypt manage to attract.
Egypt relies on billions of dollars in aid from its Gulf allies to help stimulate the economy, but economic recovery has been sluggish, and growth forecasts this year expect it to grow at 2.5% at most, well below what it needs to create enough jobs for a rapidly growing population.
Saudi Arabia is opening its stock market to foreign investors for the first time next year. It's one of the most keenly awaited economic reforms in the world's biggest oil exporter. It's being seen as an awakening of a huge opportunity and entry into the Arab world's formidable finances. Saudi XChange is the second largest in the world, which has been closed to foreign direct investment and is capitalized at $530 billion. Let's speak to our Africa analyst, Bode El-Shasami. What's on offer here? What's actually happening? Is it that kind of opportunity?
Yes, indeed. It's like Harrods coming to your street saying that they're opening up with 3 floors of shopping next year. You know that's going to be quite an impact. It's, like you said, the second largest stock exchange, hasn't yet given full access. And it's also going to take some time to get the rules right. Saudi is going slowly, and they've empowered the capital authorities responsible for laying out the rules, to work out the rules with the major investors. But this is going to be quite big. The largest petrochemical company in the world is on that stock exchange. The largest Islamic lender is on that stock exchange. So there are quite a few very large companies.
Yeah, indeed. Now, it is possible right now to get access to that, but this should make it easier. How could an individual investor get into this stock market?
Well, previously you have to be in what they call the GCC. That's the Gulf Cooperation Council. So you would need to have a broker in the GCC to be able to trade in that market. So there were ETFs through the GCC going into the market, but now you can have direct access. That means you can trade from US, wherever you are, straight into the Saudi stock exchange, and that's a huge difference.
And as is the inclusion of Sharia finance as well, which opens,
yes, I mean, it opens up the market,
other doors,
yes, for Sharia compliant people looking for that kind of opportunities are going to have a new window opened up to them. Also, lots of funds are going into this market. Many of the emerging market funds are already saying they're going to put a lot of their big funds into the Saudi flow. That means some funds will leave some other markets. So it's going to shake up the market a bit.
Well, indeed, that was going to be my sort of final question about this particular part of the interview. It will shake up the markets, won't it, dramatically?
Yes, I think it will. It's left to be seen. The rules will explain what exactly will be done. We've heard that companies that have a minimum of only $5 billion will be admitted. So it's not for the small players, and there may be a staging to it that's not quite clear. But 2015 is going to be exciting in the financial market.
Yeah, so details then. Now, by contrast, let's talk about Zimbabwe, which wants to IPO 50% of its bourse, which is actually quite interesting, isn't it? Now, who is going to be interested in investing in Zimbabwe's stock market as a company?
Well, there are companies like Econet Wireless, some consumer-oriented companies are doing quite well. There's some brewers doing quite well. It's not as, of course, elaborate, as robust as Saudi, like you said. Yeah. But the objective is to begin to introduce some more robustness, get better quality service, They're going to have a technical partner come into the Zimbabwe stock exchange. It's going to be better organized, better service. One would think that there would be it will attract investors, more investors than before.
Do you think it will? I mean, you've mentioned some of those stocks that will be available, and yet you look at Zimbabwe and still you wonder about it, don't you? What is happening in that country?
Yeah, Zimbabwe is going through troubling times now, although recently, when I was at the crop, the cereal market has improved. There's been better production, 5-year highs in cereal production. So there is some recovery, but obviously it's still a long way to where it needs to be. IMF is still supervising the country through a program, and they're owing $10 billion and don't have the capacity to service their debt. So it's still a tough situation.
Bodi Oshesami, thank you very much indeed. Now, after 2 tragedies in 5 months and 3 years of intense local and long-haul competition, a plan to restructure Malaysian Airlines could be announced next month. State investor Khazanah Nasional, which owns 69% of Malaysia Airlines, has injected almost $2 million in the carrier over the last 10 years. The airline is expected to post another weak performance in the April to June quarter, still struggling with weak passenger yields and high overhead costs. India's opposition election party has pushed a wave of first-time parliamentarians into the country's government. But will the new faces result in real reforms? Shayamantha Asakan reports.
Here in New Delhi, this gym exclusively for members of parliament and their families has seen a lot of new faces over the last few weeks, like Rahul Kaswan. I'm spending a morning with Kaswan, one of a wave of first-time MPs who've entered India's parliament since Narendra Modi's Hindu Nationalist Party won the general election in May. Modi's landslide win has brought about a big change of guard. India's new parliament, which started its first working session this month, has 315 first-time MPs in its lower house, out of the house's total of 543 MPs. That's the highest number of first-timers in 30 years. It's also the first time in 30 years that the ruling party has won a majority. So many people hope these MPs can push through much-needed reforms, especially as India's last parliament was its least productive ever in terms of the number of bills it passed. Kaswan's new life is non-stop. There's a continual stream of people from his constituency, which is 300 kilometers away, waiting outside his Delhi home, on his porch, and in his tiny office, seeking his help with their national government business. After 2 hours of morning meetings, both with these people and with fellow MPs from his state, he goes to Parliament, where I wasn't allowed to film. He'll come home tonight to yet more visitors. But this new Parliament has many of the old flaws. A big criticism of MPs here is that many face criminal charges, and over a third of this Parliament do, according to one think tank, which is actually a slight increase on the last batch. A quarter come from existing political families, according to a study by one national newspaper. Kaswan, for example, is the son of a 4-term retired MP. Indian parliaments often contain a lot of first-time MPs, even when the ruling party stays in power. Indian voters are often unhappy with their local incumbent, and that makes it tough for parties to field the same candidate 2 terms in a row. So the real challenge in the coming months for Kaswan and co is to prove that they're more than just new, they're also different.
The Swiss bank Credit Suisse has reported its biggest quarterly loss in almost 6 years after being hit by the costs of its settlement with US authorities over tax evasion charges. The bank took a hit of $1.8 billion. Overall, in the second quarter, Credit Suisse recorded a loss of $780 million. The settlement with the US authorities took place